So, good evening aspirants. Today we are going to see some concepts from chapter 1 of the economic survey. Mostly this chapter will talk about the overall picture of the economy. It will also give you the details of the further chapters on the public finance, external sector, sectoral perspectives, everything put together. But today's agenda, let's just look at what we want to call it as the growth story. In economics, whenever we refer to the word economic growth, we are actually talking about GDP. So what is this GDP? We would have studied in our basic classes that it is the gross domestic product and it is one of the measure to measure the national income of a country. So we are trying to understand how every country is earning and whether it is earning more than the previous year or not. So considering this particular concept, GDP as the economic growth, if you look around the globe, how the global economy has grown in the previous financial year. So when we say that, the data comes around 3.3% for the global economy. And we can understand that there were several global uncertainties, political uncertainties, inflationary conditions, war conditions, trade conditions, all of these things contributing to this slowdown of the global economy. Actually, global economy should be growing at a very good growth rate, but because of all these conditions, we see that it is somewhere around 3.3%, and the expectation for the upcoming financial year also is placed around 3.2% to 3.3%. When you talk about the global economy, the two major economies which come immediately into your mind is, one is this US. We want to know how US is doing in its economy. The number goes around 2.8% and they are also expecting a slight moderation in this number, mainly because of the consumption and trade related difficulties. Number two, then we think about which is the other major economy which we want to compare. It becomes the Euro area, where we are going to see how is the economic growth. When you say Euro, it has so many countries into it and there are lots of difficulties among the countries also. Some of them are service sector dominating countries. Some of them are manufacturing sector dominating countries. Overall, if we see, it has slightly improved from 0.4% growth in 2023 to 0.8% growth in 2024, and they are expecting it to reach around 1% in 2025. Why is this number looking much lesser than US's number? There are difficulties, particularly with the manufacturing sector. So, supply chain disruptions were also adding to the challenges of the manufacturing sector. So, for countries like Germany and Austria, which were manufacturing dominating, they are having challenges in improving the economy. But countries like Spain, Poland, UK, France, they're all doing a bit better because of the services contribution. So, coming back now to India, after looking at the global picture, India is presenting that our economic growth is somewhere around 6.4% at the constant prices. What we are talking here is by how much percentage our income is increasing compared to the previous year, having a constant prices which is also comparing with the base year. So, India's income is improving by 6.4%. How is India calculating this? There are three methods by which we do the calculation. One is the income method, two is the expenditure method, third is the product method. Now, I am going to tell you about two major analytical points, which is about the expenditure method and the product method. We have understood India is actually having a good growth rate when compared to the rest of the economies. But how is it possible? How is it happening in India? What is making India to have this good growth rate? For this, we are going to tell the explanation based on the two methods. One is the expenditure method. In your basic class, you would have studied that there are four things which will go into the expenditure method: consumption expenditure, investment expenditure, government's expenditure, and exports minus imports, X minus M. If I could recall back the formula what you would have studied, it is C plus I plus G plus X minus M. So, when we look at these components, to understand where is India doing well, our consumption is actually becoming robust. When I say consumption, a bit more of detail into it, rural consumption and urban consumption. Everybody will think urban people are consuming much better than the rural, but the data shows that rural demand has been robust, urban demand had been mixed. Why is this rural becoming so robust? It was because there was a good production season in that year. Kharif production was good rainfall was there, good level of reservoir levels were there. All of these things have contributed to good food grains production, and agriculture sector has done well. So this is one of the reasons why we can say that rural demand had been good. Then what happened to the urban? Why is it sounding mixed? Some areas like FMCG, fast moving consumer goods, and some areas like air traffic, they have done very well. Whereas passenger car sales, certain parameters have not done so well. So we are giving the detail as the mixed trend. So regarding the consumption, we can say that it was more than 7% growth rate, 7.3% growth in the consumption segment alone. So that's a very good factor for India. Secondly, when you look at the investment expenditure, here the economic survey is combining both the private as well as the government's investment expenditure in a place, and it is presenting the data. Looking at the government, last year we had elections. So in the beginning, there was difficulty in the investment expenditure, but slowly in the Q2, Q3, we started increasing the capex. So that was a good factor. Looking at the private investment, we see that because of the supply chain issues and global uncertainties and political situations, there was a bit of a slowdown, but later that also picked up. And in the residential segment, households are also slowly improving their construction related investment. So this is the data for the gross fixed capital formation, which is basically the investment in construction machineries. So if you look at the rate of growth in the gross fixed capital formation, it was around 6.4%. So consumption is more than the investment. So this is a point for us to remember. Then after the C plus I plus G, now I come to the last parameter of this expenditure method, X minus M. Generally, everybody will have an opinion that India is importing more and exports are actually less. But in the previous financial year, we have presented a different picture. How different was it? Exports were actually growing by 5.6% or 5.7%, whereas imports were also growing, but they were growing by 0.7%. So what now has happened is exports have become bigger than the imports, and for 1 or 2 quarters we did have a surplus in the current account, which is a very rare phenomenon for India, but we are also improving. Now comes the question, how did our exports become higher and how did our imports become smaller? Our exports have been dominating with the services, which is the usual trend. But in the goods sector also, we have done well in the textiles segment, and we are also doing well in the diversification of the exports. So they have identified some 20 principal commodities, which they call as the PCs. Those principal commodities exports are also happening, which were not happening in the previous years. So because of these factors, we see that the exports are also improving in the country, and external sector X minus M became positive, and it was also contributing to the GDP of the country. So consumption is robust, investment is picking up, our external sector is also becoming strengthened. All of these things have added a positive sign for India to achieve that 6.4% growth rate. Now I will come to the second perspective or the second method, the product method, which we thought we will discuss as the second one. In the product method, the entire economy is divided into primary sector, secondary sector and the tertiary sector. So when you say the primary sector, we have already given the substantial reasoning that agriculture did a good performance in the last year with 3.8% as the growth rate, mainly because of this good monsoons, good levels of water and also good kharif production. So these reasons have definitely made agriculture as a driver of growth in the last year. And if you look at the manufacturing sector, yes, it had been moderating with the economic growth because of the supply side issues. But you can say that construction and electricity sectors were doing good, whereas iron and steel, cement sectors, mining sectors, they all had a bit of difficulties, and the oil companies were also facing challenges from the international price pressures. So these were the reasons why the manufacturing sector was moderating a bit. There the growth rate was somewhere around 6.2%. But coming to the third sector, which is the services sector, it did give a very robust growth with the 7.2% as the growth rate, and all the professional services, real estate services, IT services, financial services, hospitality services, and the air services, these were all dominating, and it was contributing very good to the exports as well as very good in the production of the services. So all these three sectors are showing a good positive sign of growth rate. This sectoral perspective is also giving us the idea that mainly because of agriculture and the services sector, the overall growth rate was kept around 6.4%. To have a summary about the growth story of India, there are three things for us to take away. We were able to achieve this good growth rate mainly because of strong agriculture, strong consumption, strong services sector, strong external sector, and the expectations for the upcoming financial year, they have placed it somewhere between 6.3% to 6.8%. So students, if you ask us a question whether I should remember all these data, that is not the prime point here. But in the current and the previous financial year, what are the major factors which have propelled the growth? That is the major key point which we all have to remember for the examination purpose. Thank you everyone. Good day.